What if I told you there's an AI stock that Wall Street believes could gain nearly 40% over the next year? And in the most bullish scenario, more than double from current levels? Today, we're talking about ServiceNow, ticker symbol NOW. The stock is currently trading around $102, while analysts have an average price target of $140.63. Even more surprising, the highest analyst target sits at $236 per share. So is ServiceNow one of the best AI opportunities in the market right now? Or is Wall Street being too optimistic? Let's break down the chart, fundamentals, recent news, and future potential. ServiceNow is one of the world's leading enterprise software companies. Its platform helps businesses automate workflows, improve productivity, and reduce operational costs. Think of it as the operating system that helps large organizations manage everything from IT services and HR processes to customer support and AI-powered automation. As artificial intelligence becomes a priority for enterprises worldwide, ServiceNow is positioning itself as a major winner in the AI revolution. Let's start with the chart. The stock experienced a significant correction from its previous highs and has been trading near the $100 level. The good news is that the stock appears to have established a strong support zone between $85 and $90. This area has attracted buyers multiple times, suggesting institutional interest. Currently, ServiceNow is consolidating around the $100 to $105 range. For bulls, the key resistance level is around $120. If the stock successfully breaks above that level, the next major target could be the analyst consensus target near $140. On the downside, investors should closely monitor the $85 support level. A breakdown below that area could signal additional weakness. Technical outlook, support, $85 to $90, resistance, $120, bull target, $140, extreme bull case, $236. Now let's talk fundamentals. ServiceNow recently reported impressive quarterly results. Revenue grew approximately 22% year over year, reaching nearly $3.8 billion. That's a very strong growth rate for a company of this size. Even more encouraging, management raised its subscription revenue outlook, showing confidence in future demand. Subscription revenue is especially important because it creates recurring cash flow and predictable growth. The company also met or exceeded analyst expectations on earnings. This demonstrates strong operational execution despite ongoing economic uncertainty. Another major strength is ServiceNow's customer base. The company serves many of the world's largest enterprises, creating a strong competitive moat and high switching costs. Once businesses integrate ServiceNow into their operations, they rarely want to replace it. Here's where things get really interesting. The AI boom is no longer just about chips and hardware. The next phase of AI is software. Companies need platforms that can automate tasks, manage workflows, and integrate AI agents into daily business operations. That's exactly where ServiceNow shines. The company has been aggressively integrating AI capabilities throughout its platform. As enterprises invest billions into AI transformation, ServiceNow could become one of the biggest software beneficiaries. Many investors focus exclusively on companies like Nvidia. But ServiceNow may represent a less crowded way to invest in the long-term AI trend. Several recent developments have strengthened the bullish case. First, the company delivered strong quarterly earnings and increased guidance. Second, enterprise demand for AI-powered workflow solutions continues to grow. Third, Wall Street analysts remain highly optimistic about the company's long-term growth prospects. Many analysts continue to rate the stock as a buy or strong buy. This positive sentiment helps explain the significant upside reflected in analyst price targets. Of course, no investment is risk-free. One concern is valuation. ServiceNow has historically traded at premium multiples because investors expect strong future growth. If growth slows, the stock could face pressure. Another risk is competition. Major technology companies like Microsoft, Salesforce, and Oracle are investing heavily in AI-powered enterprise software. Finally, broader market volatility could impact high-growth technology stocks. Investors should keep these risks in mind before making any decisions. So, is ServiceNow stock a buy? Here's my conclusion. ServiceNow combines three powerful investment themes: enterprise software leadership, recurring subscription revenue, artificial intelligence growth. The company continues to deliver strong financial results while positioning itself at the center of enterprise AI adoption. In the base case, Wall Street expects approximately 38% upside. In the most optimistic scenario, analysts see the stock reaching as high as $236 per share. While short-term volatility remains possible, the long-term outlook appears attractive. For investors looking for an AI stock beyond Nvidia, ServiceNow is definitely one to watch. What do you think about ServiceNow stock? Do you believe it can reach the $140 analyst target, or even the $236 bull case scenario? Let me know in the comments below. If you enjoyed this analysis, make sure to like the video, subscribe to the channel, and turn on notifications for more stock market and AI investing content. Thanks for watching, and I'll see you in the next video.